Welcome back, Wyckoff Nation, to another edition of Anatomy of a Trade. I am your host, Franz Herr, and today I am joined by our sensei, Roman, and he's putting in a cameo appearance to go over a trade that was done by a student in the spring semester in CRM, Salesforce.com, by Eric. So welcome, Roman. Wonderful that you're here. And why don't we jump into Eric's trade and take a look at it?
Yeah, happy to be here. Let's talk about this trade.
Okay. Well, we see here I think this is an abbreviated portion of the actual trading range that Salesforce had been in, but what we're seeing, at least in the build up to Eric's trade, is a background of a downtrend. So we're coming in, and this might just be a swing, but it's still a downswing. So that's our initial bias is going to be to the downside, but that has to be confirmed or to fail. So we see that we come into, and it looks like there's already a well-defined trading range that's been showing to us here with a support and resistance. And if we look, kind of dissect this downswing that we're seeing that leads up to Eric's trade, we see that there's a break from some area, possibly of up thrust action or up thrust, that comes down into the middle of the range. And then we have this series of slightly lower lows and not necessarily even slightly higher, lower highs. There's some actual higher highs in here. So it's a substructure in and of itself that shows the ability to fail and then comes back down to support. And we have a very interesting volume signature here. So what do you think, Roman?
Yeah, well, first of all, let's also acknowledge that there's a little bit more history to the left, and I think it's important because it kind of would show us the initial stop in action here. So the trading range kind of like goes like this. It's stepping down and then stepping up type of structure. But if we were just to take the last leg down, I mean, the most important event was here. So this is where it all plays out from. Initially, just still weakness, inability to overcome that levels, and lower lows suggest that we're gonna probably produce one more breakdown into the lower low. It has its own very important event right here. And then we're seeing, as Franz was describing, this area, deterioration of selling behind the drop in the volume signature, drop in the supply, drop in the downward spread, drop in the volatility, and not a very big substantial commitment below the support. In fact, only one bar after the emergence of the supply that breaks the structure, but the close of it does not really extend too much below like the support cluster. So weakness on the breakdown, then weakness on the follow through, weakness on the tests by the supply suggests the rally. And as we start rallying, we start seeing demand, and this is where we are starting to kind of accumulate more and more. So the first point of entry happens here on no supply bar. So there is an attempt to go down. Yeah, I'd say a really good entry, Eric. And then I would probably be thinking any type of bar that expands like this, and expansion first is very small, then more, then even more. So any type of up bars with expansion would be my candidates, to enter, or any type of declines that have declining supply signature behind it. So somewhere here. So there are definitely a lot of opportunities to enter here. Franz, what do you think about the entries?
Well, before I answer that question, I was going to ask you another question.
Mhm.
What in the background would give you the confidence to begin not just putting on a single position, but as Eric's done here, adding multiple positions in this trade?
Yeah. Well, just seeing kind of like the impulse of selling and what happens afterwards, I think is very telling story here. So we're seeing kind of like supply comes in, and then what happens afterwards? Like momentum diminishes. We're seeing this in the shortening of the thrust, in the shortening of the spread. Then momentum comes again, and with selling, although not at like a big volume signature, but selling has come here, for this decline. And then what do we see? Then again, some kind of, ambiguity about the continuation. Then the next break, and then even less so, in terms of the volatility in the local structure. So kind of like the story of deteriorating selling and deteriorating downward result, suggestive of the rally. And again, it's this discussion, Franz, that we had before the recording. How does the character changes? Could you really find the solution to the bias just based on the character alone? I think it's a very worthy exercise for us. So it's kind of has this anticipation of the rally. And then just based on how the price reacted, you could start building scenarios how the price is going to go up. So for instance, this was weak, so this probably could be overcome easily. And have, somewhat of a good extension above, good test, and then continuation. Well, then what's the next level? Well, this is a very important level. And in comparison to the previous chart, this is a slight difference, very kind of like a very nuanced difference, right? So here we actually overcoming this area of the supply that breaks to the downside ever slightly, or we're just intruding in the upper part. Remember how in the previous anatomy of the trade, we actually came to the lower part of that breakdown. And this is that difference. This is that nuanced difference about the strength. So with this, now you're thinking, could there be some kind of continuation beyond what seems to be a non-threatening reaction that comes? And I would say that to me, that still looks maybe somewhat close to the magnitude of what we have had before, maybe slightly more. So I probably would be thinking here, should I be actually holding through this? Franz, what's your sense about this reaction?
Uh,
Because exiting all of the four tranches, what is my question here is, what is the reason, Eric?
okay, so looking at what happens here, we come up and we do slightly up thrust the area that Eric has marked as resistance. But then what is the reaction as you point out? Well, we come back and we really basically just come into, I think we could make a combo significant bar out of those last two bars where the entry occurred just before that the last little up thrust. So I would make a combo bar out of that. And I would say, what is the test that we're seeing here? How deep is it into that? I guess the last bar that has the sort of the little bit of a reversal character to it. There's some penetration into that, but the previous two combo bars were just getting into the middle, and then we suddenly recover back up into, and the volume's low. There's low supply. So we're just not seeing, as you mentioned, does this look threatening? Not at this point. So I think if we read Eric's note above, he says this was a short-term swing trade.
Yeah.
So his intention was to get out basically when price reached resistance, and that's fine. So it's
Yes.
more of an intellectual kind of discussion that I guess whether maybe
Well, I think the practicality of this is, and thank you, Franz, for reminding me that this was probably a short-term swing trade. So meaning that at kind of like the first sign of the change in the structure of the swing, you want to get out. So the price went still slightly lower after that, and then it continued to go higher. So you would have to actually weather a little bit more before the next breakout. So holding through would be a long-term swing intention. If this was a short-term swing intention, then this is a perfect exit, absolutely, because you don't want to go through this. Your goal would be to enter somewhere here. You wouldn't be able to do that because there was a gap, but maybe somewhere, later on, somewhere here after the backup. But for the short-term swing, yes, absolutely, this is such a great swing. You kind of very efficient on a short-term swing time frame. You take in the entry close to the bottom or almost at the bottom and close to the top. So very, very efficient trade, and all of the points of entry as add-ons just add to the profitability of the position. I mean, maybe there could be something else. Let's just go through them. Okay, so yeah, so we're recovering here on the confirmation. I like that. Maybe we're a little bit missing right here, one of those early entries if we enter a little bit earlier, so there is a little bit more efficiency again, just kind of like doing it one point of entry earlier. But other than that, I mean, like all of the entries are at the points of the confirmation. So Franz, I really like this trade. Again, those are just kind of like more nitpicking for the short-term swing. For the long term, again, it's just the idea of the stay in continuation. But I mean, Eric has been progressing so well. So Eric, really great trade.
And I think when we get into the feedback loop, we'll see that Eric loved this trade too. So why don't we go through his post-trade analysis? So first of all, the bias. He's not using our pre-approved little checklist, but he's going through the correct feedback numbers here, or yeah, whatever. So anyway, so bias breakout, yes, and retest of support, yes, on the timing. The character, no, and this is something we all have to deal with, Ramon. What do you think he's talking about there?
Thinking, yeah, actually, I would have to ask Eric. Character, usually I would be thinking how the price moves, but I would say yes here, just because he identified that, we are going to be moving we're going to have a better rally than anything before, like, than anything like this. So, but okay, let's say no.
Okay. Point of entry?
Yeah, for sure. Target.
Well, I don't know about that.
I don't know. I mean, like, to me, this is the target, and he says the target zone here. So maybe like he means that he didn't exit right on this bar.
Wow. Well,
okay.
we want to sell at resistance, so that's
stop loss adjustment, yes. Add-ons, definitely yes. Trims not required. Okay, exit, target achieved, yes. Variance 90%. Yeah, I'd say like this is a high variance trade. Yeah, absolutely, I would agree with that.
Okay. Well, let's jump into the mistakes that he's mentioning here. Could have trimmed and stayed in the position. You pointed that out.
I like that. Yeah, I like that there is awareness of this, that, yeah, there is some, strength behind the move. And I actually really like this solution as well. Not just stay in the position, as I was suggestive, but actually trim the position, take the profit, satisfy one part of your trader's ego, because it wants to take the profit. So satisfy that, but yet stay in the position, and maybe down the road actually find places to add. So that would be a really good solution.
Great observations. I plan to have a second look as the local test plays out. So I think he's going into what you're talking about in terms of the continuation opportunities that this might present. I'm not sure that's a mistake, though. I think that's probably, just a best practice, actually. So I'm not sure I understand how that's a mistake, but at any rate, what do you think?
The only thing that I would say here, Eric, is I would say the question here for your level would be under what conditions do I actually go either with larger size right away, immediately, or full size? So that is the question that is at your level to actually ask yourself, because there is some kind of opportunity cost to the later add-ons as well. And I want you to think about that, right? So for instance, like, why not take this point of entry, that size, right? And that money, and actually enter here more, or maybe add it earlier than that, somewhere here. So your efficiency increases. When you are winning, you want to be a pig, even in a short-term swing trade. So those questions are probably has to be raised because the technique of pyramiding, I'd say, is more convincing strategy for the beginners to always make sure that you have the confirmation of your trade. But for a more advanced trader, there should be an understanding of the opportunity itself. Is this going to happen the way how I'm thinking? And if it does, like, should I be increasing the size right away? But just a completely different level. But Eric is definitely heading that way.
Wow, great discussion. Thank you. So his best practices, moving stop losses, made this a profitable trade. I guess he just allowed the stop loss. Well, he actually got out even after an extension above that last stop loss. So, but using that stop loss, just trailing it up is definitely a best practice. Anything to add to that, Roman?
Just the mechanical nature. You want to be with the stop losses as mechanical as possible, because it's the discipline that we require to take the profits. Otherwise, discretionary, your trimming could be discretionary. This could have been a discretionary exit. I mean, like, if we're nitpicking here to the last point, like, this is the diminished progress to the upside. The open is higher than the close, so there is a little bit of the negative, to the close. And then we have a slight supply spike. So you could kind of nitpick on those type of things where there could have been a slightly earlier exit, but it could be a discretionary Wyckoff exit. The mechanical exit is just perfect. Just follow the swing, follow the trend. And once structure starts to break, then, get out. And, in terms of the stop losses, momentum started to decrease here. So therefore, you probably just want to go really like closer to the last bar. So that would be my inclination. Also, I forgot to mention this, Franz, but this is the bar of interest to us as well. This is where demand has increased last. So we would be expecting, if we have some kind of reaction right here, for the price to go into this level right here. So then at this level, we want to pick it up again somewhere here for the next point of entry. And therefore, the stop loss, if you're a long-term swing trader, which I think that this was a short-term swing trade, for the long-term swing trader, you would be thinking the stop loss for me would stay here below this bar, as here momentum goes down. I just wanted to mention this.
Yeah, great observations. Thank you. So best practices, broke trade capital into 4 tranches. And so go back and listen to this discussion a little while earlier about, possibly maybe going full size at POE number 1, point of entry number 1, if the setup is correct. Roman's already talked about that. and then having a specific target in mind. And that's very, very helpful. It certainly helps you to determine your R factor going into the trade, and just good overall best practices. Ramon, any additions? Or
No, this is yeah, this is great. I like in the feedback loop. That was a fun trade. Those are the best. So I'm really happy that you're experiencing this, Eric. I would like to do this again, keep moving the stop losses. I mean, to me also, there is such a joy as when you are profitable and you just keep moving the stop losses based on your methodology, and see how you protect an unrealized gains. Obviously, with the stock, there could be just gap down and so on and so forth, but still just really good feeling here. Good risk reward, 7-1. Yeah, I like that too. And this tells me that this was an expanding, and swing trade. Imagine again, like being a little bit earlier on some of the points of entry, and then the efficiency would be even better. And then maybe even like leaving, as you said, a little bit on for the long term, maybe because you start recognizing, this could be a really good start, change of behavior to a really good uptrend that doesn't has a lot of signs of selling. So should I be in this position, and maybe opportunistically add to the position later on? But overall, such a great trade, such a great awareness, understanding, execution as well. So France, yeah, absolutely great trade.
okay, well, thanks again for joining us in another cameo appearance, Ramon. This has been Anatomy of a Trade, and thank you everybody for your viewership and for submitting your trades. It's great for us all to go through these and post-trade analyze them. So thanks, Ramon.
Thank you, France, and thank you, everyone.